There is this recurring, almost rhythmic pattern in how human progress actually unfolds. If you zoom out far enough, the entire history of civilization is really just a story about removing friction from the movement of information.
Right, it's always about finding a way to reduce that resistance.
For most of human history, information moved exactly at the speed of a horse. If you needed to coordinate an empire or, say, share a scientific discovery, that data was physically constrained by the muscle and bone of an animal.
Which is a strict biological speed limit.
Yeah, precisely. And then, in the 19th century, we experienced this profound shift. The telegraph, and eventually the telephone, allowed us to take information off the back of a horse and place it onto a copper wire. We went from miles per day to thousands of miles per second.
Right, because we stopped relying on biology and started relying on physics instead. And that paradigm shift basically built the entire modern world.
It did. But nature always imposes a tax, right? It always has a fundamental speed limit. And today, we have hit a physical wall. The legacy hardware that runs our digital infrastructure, the stuff relying on electrons moving over copper, is struggling. It is just too slow and, well, it runs far too hot.
We are essentially being forced to move toward a world of light.
Welcome to another episode of Delta Investments Deep Dive, where we go in-depth and unpack our research on specific stocks and discuss the risks. I am Marcus.
And I am Sloan.
And just a quick note for you listening, today's date is April 20, 2026. The focus of our analysis today is a company called Lightwave Logic, trading under the ticker symbol LWLG. We're looking through technical white papers, foundry press releases, and their latest financial filings.
Right, because we really want to understand the fundamental physics of this transition from the electron to the photon. And to grasp the gravity of what is happening here, you really have to look at the macro environment, specifically the artificial intelligence boom.
There's a widespread misconception about AI right now. I think people tend to assume that the ultimate bottleneck for artificial intelligence is simply intelligence itself.
Like it's just a software challenge, you know?
Exactly. The assumption is that progress is just about writing a better algorithm or stacking more processors into a server rack. We think of AI as a brain that just needs to learn more.
When you actually step inside the physical infrastructure of the internet, things look very different. I mean, look at these hyperscale data centers that are scaling up to handle generative AI. You realize pretty quickly that the bottleneck is not the software.
No, it's thermodynamics. It is heat and power consumption. These massive AI factories are becoming the most power-hungry structures on Earth.
The problem isn't the silicon brain doing the thinking, it is the nervous system trying to move that immense volume of data around. It's what we could call an invisible friction.
Because we don't see it when we type a prompt into an AI model on our phones. But somewhere in a climate-controlled facility, legacy hardware is fighting a losing battle against the laws of physics.
Specifically the modulators, the components that convert electrical signals into optical signals so data can travel over fiber optic cables. They rely on inorganic crystalline materials, right?
Yeah, legacy materials like lithium niobate or just basic silicon. And these materials are hitting a thermodynamic wall because of their fundamental molecular architecture. They possess what chemists refer to as a closed valence structure.
Which sounds like dense academic jargon. I know. But it is actually the mechanical root of the entire bottleneck.
It is. A closed valence structure basically means the atoms within the material are rigidly bound to one another. They're locked into a very specific, inflexible grid.
And because of that atomic rigidity, you just cannot make the molecular improvements necessary to scale them down in physical size or up in speed.
When the hyperscale industry demands data rates of 800 gigabits per second, you can't simply force more electrons through these rigid crystals without generating massive amounts of heat.
They just don't allow for miniaturization into those microscopic pathways required for next-generation hardware. It's like trying to run a high-speed bullet train on wooden tracks.
That is the perfect analogy. At low speeds, wooden tracks work fine. But as you push the train to 200 miles per hour, the rigidity and the friction of the wood simply cannot handle this track.
It generates immense heat, and eventually the tracks catch fire. That is exactly what happens when you push a closed valence structure beyond its physical limits. You are risking the integrity of the entire system.
Which is why the solution Lightwave Logic is bringing to the table is so vital. They are not trying to build a slightly better wooden track. They are changing the material entirely, moving to electro-optic polymers.
Specifically, this proprietary class of materials they call Perkinamine. It is a massive leap from the limitations of inorganic crystals into the vast potential of organic chemistry.
And the core science here revolves around this really elegant phenomenon called aromaticity. It sounds like a term from a perfumery, but structurally, it is fascinating.
It really is. In molecular chemistry, aromaticity refers to an arrangement where atoms combine into multi-membered rings. Instead of electrons being rigidly locked between two specific atoms, the atoms in an aromatic ring share their electrons across the entire ring.
Yeah, so the electronic charge distributes evenly over a much greater surface area, and that creates extreme chemical stability.
Exactly. Because the charge is distributed so evenly, it prevents hostile elements from finding a weak point to break down the material. It gives these polymers the robustness they need to survive in a commercial operating environment.
But the real breakthrough happens when you introduce an electric field to this highly stable electron sharing ring. It triggers the Pockels effect.
Because the electrons are somewhat fluid within that ring, applying an electric field causes the electron cloud to physically shift. This alters the refractive index of the material instantaneously.
Which causes a phase change to the optical signal passing through it. Now, if you are listening to this, terms like phase changes and refractive indexes can sound entirely abstract. Let me try to visualize this for you. Imagine you're trying to send a complex message using Morse code with a flashlight. Historically, you have to physically flick the switch on and off for every single dot and dash. That mechanical action takes time. You can only flick that switch so fast before the mechanism just fails.
And that physical flicking is essentially what legacy hardware is doing with electrons.
Exactly. But what if, instead of turning the flashlight on and off, you leave the beam on continuously? Then you pass a specialized piece of material in front of the beam that slightly bends the light to encode the signal.
Which you can manipulate millions of times faster than mechanically flicking a switch. That is what changing the refractive index does. You manipulate the light using a polymer with almost zero electrical resistance.
Yeah, operating at extremely high frequencies, you completely remove the mechanical friction. So, connecting this back to the macro picture, this shift is not just a modest feature upgrade.
This is a fundamental survival necessity for the global power grid. If we cannot move data using significantly less power, the AI infrastructure simply melts down.
Or it just runs out of available electricity. It represents the only viable physical pathway forward to achieve the density, speed, and low power requirements that hyperscale data centers are aggressively demanding.
But this introduces a fascinating psychological tension. If this material is truly a survival necessity, why isn't this company generating billions of dollars in revenue right this very second?
That is the core question. We have to transition here from the physics of light to the psychology of what we call the commercial gap. The commercial gap is easily the most difficult phase for any deep tech company.
And certainly the most agonizing for the market participants observing it. We operate in an ecosystem that demands tangible financial results every 90 days. Quarterly earnings dictate the entire mood.
So in that highly impatient environment, you have to ask yourself, how rare is a company that is quietly engineering for a milestone that is 3 or 4 years away? It is a severe time preference test.
It really is. I mean, is it possible that we are overestimating what can happen in a year, but vastly underestimating what can happen in a decade?
I think so. Look at the timeline for Lightwave Logic. They officially transitioned the commercial operations in May of 2023 with a material supply license agreement. Yet management has been explicitly clear that meaningful volume-driven revenue is not expected until 2027.
That 4-year gap in a market that craves immediate gratification is incredibly difficult to digest, but you have to look at what is actually happening in the laboratories during those 4 years.
Right. Currently, they have 3 major customers in Stage 3 of their design win cycle. What does Stage 3 actually entail? It is rigorous, almost invisible engineering work.
Because the telecommunications industry does not care if your new polymer is the fastest material on Earth if it degrades after 6 months. Stage 3 involves excruciating reliability testing.
They put these polymer modulators into specialized environmental ovens. They bake them at 85 degrees Celsius with 85% humidity and blast them with high-intensity lasers for thousands of hours continuously.
They are looking for even a fraction of a decibel of optical loss. The industry is fundamentally paranoid. You cannot introduce a novel organic plastic into a billion-dollar data center without absolute certainty.
Because if 10,000 modulators fail simultaneously, the replacement cost and network downtime are catastrophic. That paranoia is exactly what dictates the 4-year timeline.
And surviving that commercial gap requires significant capital. Engineers need salaries, laboratories consume resources, and these complex materials have to be synthesized. Imagine you are climbing Mount Everest. You don't buy an oxygen tank at base camp because it's a luxury. You buy it because there is a segment of the climb, the death zone, where the atmosphere simply cannot sustain life.
Exactly. In the semiconductor industry, this grueling multi-year foundry qualification cycle is the death zone. You need oxygen to survive it.
How do you distinguish between a company responsibly buying oxygen and a company that simply miscalculated the cost of the crime?
It's a very fair challenge. The distinction lies in what that capital is actually funding. In materials science, validating a novel polymer inside a global semiconductor foundry requires purchasing actual wafer runs.
Right, renting time on a global foundry's production line costs an absolute fortune.
You cannot bypass the qualification process. You absolutely must finance your way through it. But assuming they survive that cycle and reach the summit in 2027, the obvious question becomes one of monetization.
How do you scale this profound breakthrough without raising billions to build your own fabrication facilities? This is where their strategic positioning is highly scalable. They operate an asset-light, high-margin licensing model.
Rather than attempting to manufacture and sell the finished devices themselves, which would force them into direct competition with established giants, they focus exclusively on the materials.
Their projected revenue streams will flow from material supply, where they anticipate gross margins exceeding 60%, plus upfront licensing fees and recurring royalties.
It is fundamentally the difference between trying to build an entire car and inventing the fuel that makes every car on the road move. The semiconductor space is completely obsessed with silicon photonics right now.
Yeah, pouring billions into building better silicon-based engines. But silicon is actually quite sluggish as an optical material. Lightwave Logic is not fighting a war against silicon photonics.
They are providing the necessary fuel to dramatically enhance those existing silicon engines, and they deliver that fuel through process design kits, or PDKs.
Grasping the concept of a PDK is critical here. It is essentially a highly detailed proprietary recipe book provided by a manufacturing founder to a chip designer. It mathematically guarantees how components will behave during mass production.
And if your material is not in the foundry's recipe book, you effectively do not exist to the designers building the next generation of hardware.
Which is precisely why their focus on foundry qualification is so pivotal. Their platform is now officially available in the GDS Factory PDK for global foundries.
And they have agreements involving Silterra and Tower Semiconductor. Let's break down what that means on the factory floor, specifically regarding back-end-of-line integration, or BEOL.
Right, the front end is where you etch the transistors. The back end of line is where you wire all of those billions of transistors together so they can communicate. It is a brutal environment of high temperatures and harsh chemicals.
Historically, if you attempted to introduce a standard organic polymer into that harsh back-end environment, it would simply melt or warp.
The breakthrough here is physically proving that their Perkinamine materials are stable enough to survive the standard BEOL process. They can be applied as a thin film coating using the exact same manufacturing tools these foundries already have.
And once that validation happens, an incredibly deep, invisible moat is formed around the business. Once your proprietary polymer is baked into a multi-year hardware roadmap, it becomes nearly impossible for a competitor to casually come in and displace you.
The switching costs are astronomically high. The engineering work required is invisible to the consumer, but to the industry, it represents a permanent structural shift.
It allows them to decouple revenue potential from their physical footprint. They don't have to build factories. They just supply the advanced chemistry that makes existing factories relevant for the next decade of AI.
Investing in the physical limits of nature carries a deep, quiet risk. It requires an extraordinary tolerance for long periods of apparent silence, while the grueling engineering happens in the dark.
You have to be willing to endure the commercial gap. But the reward profile is tethered to solving a thermodynamic problem that the entire modern digital economy relies upon.
The speed of information absolutely must increase, and the physical power required to move it absolutely must decrease.
Those are the non-negotiable laws of the new economy. It serves as a stark reminder that human progress does not always arrive in the form of a flashy software update. Sometimes, profound progress looks like a microscopic organic molecule sharing an electron.
It leaves you with a thought worth pondering. What other invisible frictions currently exist in our digital lives? What other massive infrastructural bottlenecks are quietly waiting for a materials science breakthrough?
And as market participants, are we actually patient enough to invest in the decade-long solutions? Or are we too distracted by the noise of the next 90 days?
We hope you enjoyed this deep dive, and thanks for listening. Please follow us and subscribe on your favorite platforms. Don't forget to check out our Substack, Delta Investments. Until next time.
This analysis is based on publicly available information and does not constitute financial advice. Always conduct your own research before making investment decisions. By listening to this podcast, you agree that you are in charge of your own decisions and risks and that you are solely responsible for any investment decisions you make.